The charts are screaming a warning sign that no investor can afford to ignore. On this Christmas Eve, Shiba Inu is facing a brutal market reality, struggling to find a floor as the bears tighten their grip. What is driving this sudden crash? And what is the absolute last line of defense for the price? Let's break down the critical levels you need to watch right now. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The Shiba Inu ecosystem, a dominant force in the meme coin space, is currently navigating one of its most challenging periods in late 2025. The token has been under sustained bearish pressure, a trend that has accelerated dramatically in the weeks leading up to Christmas Eve. This decline is not an isolated event, but a confluence of broader market fatigue and specific technical breakdowns within the Shiba Inu chart structure. The market is witnessing a significant test of investor resolve, as the price action threatens to wipe out months of consolidation. The question is whether the community and large-scale holders, often referred to as whales, will step in to defend the critical support levels that are now in immediate danger. The current struggle is a direct result of a failed breakout attempt earlier in the month, which has since led to a cascading effect of selling pressure, pushing the asset toward its yearly lows. The main event driving today's market sentiment is the confirmed breakdown of a key psychological and technical support level. As per on-chain data and technical reports, Shiba Inu has decisively fallen below the 755 units price point, which analysts had previously identified as a crucial area of defense. This breach has triggered a fresh wave of selling, leading to the Christmas Eve crash that is dominating headlines. Over the last 24 hours, the price movement has seen a decline of approximately 1.7%, with the token trading in a tight but bearish range between 697 units and 717 units. More worryingly, the token has shed over 10% of its value in the last 7 days, and a staggering 18.7% over the past 2 weeks. This sustained downward momentum confirms that the bears are firmly in control, and the immediate focus has shifted entirely to the next, and potentially final, critical support level before a full retest of the yearly low. The market is reacting to the realization that the previous consolidation phase has failed, and a deeper correction is now highly probable unless a massive influx of buying volume materializes immediately. The market's reaction to this price collapse has been one of extreme fear and capitulation. The 24-hour trading volume for Shiba Inu has surged to $205 million, a clear indication of high-volume selling as traders rush to exit their positions. This spike in volume accompanying the price drop is a classic bearish signal, suggesting that the move is backed by strong conviction from sellers. The token's market capitalization has contracted significantly, now sitting at approximately $4.3 billion, a drop that has seen its coin market cap rank fall to 24th. This diminished market cap reflects a broader loss of institutional and retail interest in the asset. Furthermore, the sentiment across derivatives markets is overwhelmingly negative. Reports show a negative volume-weighted funding rate, which suggests that short position traders are willing to pay a premium to maintain their bearish bets, further confirming the market's expectation of continued decline. The overall market structure is showing signs of extreme stress, with the price trading well below key moving averages, reinforcing the long-term downtrend. The technical and on-chain evidence paints a grim picture for Shiba Inu. On-chain data shows a deteriorating ecosystem, with a significant net outflow of 125.9 billion Shiba Inu from exchanges in the last week. While outflows can sometimes signal accumulation, in this context of falling prices, analysts note it suggests large holders are moving tokens to cold storage, perhaps to avoid panic selling or to wait out the bear market, but it does little to alleviate the immediate selling pressure on exchanges. Technical indicators are flashing red across the board. The relative strength index is currently hovering near 34.9, teetering on the edge of the oversold territory. While this might suggest a bounce is imminent, The overall bearish momentum often pushes the RSI deeper into oversold levels before any meaningful reversal. The moving average convergence divergence has confirmed a bearish crossover, with the MACD line falling below the signal line in late December, a powerful technical sell signal. Crucially, the price remains below both the 50-day and 200-day exponential moving averages, a classic sign of a sustained, long-term downtrend that has failed to find a bottom. Analysts are divided on the immediate future, but the consensus leans heavily toward further downside. Expert commentary suggests that the confluence of on-chain deterioration and weak technicals points to a high probability of Shiba Inu testing its yearly lows. The immediate implication of breaking the 755 unit support is that the next major target for bears is the 635 units level, which corresponds to the 1.618 Fibonacci extension of the recent swing high. A failure to hold this 635 units level would open the door to a full retest of the yearly low, which sits at an alarming 816 units. However, there is a glimmer of hope. According to reports, 67.9% of top Binance traders are maintaining long positions, signaling a strong conviction among a segment of professional traders that a rebound is possible from these lower levels. This suggests that, while the broader market is panicking, a core group of large-scale traders is positioning for a potential bounce, implying that the 635 units level could indeed be the point where significant buying pressure is unleashed. The implication is a high-stakes standoff between panic sellers and long-term accumulators at this critical Fibonacci level. Despite the dramatic price action, the Shiba Inu community and development team have maintained a relatively stoic front. On social media, community trackers show a surge in activity, with the hashtag #Shiba Inu Crash trending, but the tone is mixed. While some retail investors express fear, the core community, often referred to as the Shib Army, is using the dip as a rallying cry for accumulation, viewing the crash as a Christmas sale. Developer hints, primarily from Kusama's social channels, have focused on the continued quiet development of the Shibarium Layer 2 solution. There have been no major announcements or emergency updates, suggesting the team views the current price action as a market-wide phenomenon, rather than an internal ecosystem failure. The lack of meaningful innovation or adoption for Shibarium, however, is noted by analysts as a structural risk that leaves Shiba Inu vulnerable to broader market headwinds. The community's resilience is a mitigating factor, but without a fundamental catalyst from the development side, the price is left entirely at the mercy of technical and macroeconomic forces. The forecast for Shiba Inu is highly dependent on the defense of the next critical support. The immediate outlook is bearish. Analysts predict that the price will continue to gravitate toward the 635 unit support level. If this level holds, a short-term bounce back toward the 755 units resistance is plausible. If it fails, a rapid descent to the yearly low of 816 units is expected within the next 2 weeks. The long-term forecast remains cautious. While some AI-based forecasts suggest an average price of 729 units for 2026, representing a potential upside of about 2.6% from the current reference price. This is a modest prediction. For a significant long-term rally, Shiba Inu needs a fundamental catalyst, such as a major Shibarium adoption milestone or a significant corporate partnership. Without this, the token is likely to remain range-bound, with the 635 units level acting as the floor and the 976 units level acting as the ceiling for the next 3 months. The 3-year outlook is entirely dependent on the success of the Shibarium ecosystem in generating real-world utility and transaction volume. The current market situation demands a balanced perspective, acknowledging both the extreme risk and the potential for a high volatility rebound. The primary risk is the failure of the 635 units support, which would confirm a deeper bearish trend and potentially lead to a mass capitulation event. The extreme fear index reading of 17 is a red flag, but it is also a contrarian indicator. Historically, extreme fear often precedes market bottoms, suggesting that the current panic could be setting the stage for a sharp, albeit temporary, reversal. The cautionary point is that the broader crypto market is in a corrective phase, and Shiba Inu, lacking significant utility, is disproportionately affected by these macroeconomic headwinds. Investors should be aware that the high concentration of tokens in whale wallets, while potentially stabilizing, also amplifies price swings due to the possibility of large, sudden sell-offs. The neutral insight is that the token's base-building phase around the 700 units level suggests a strong psychological floor is being established, but this floor is fragile and requires constant defense by buyers. So, as the holiday lights twinkle, the Shiba Inu market is flashing a stark warning. The battle for the 635 unit support is the only thing that matters now. Will the whales step in to defend this critical Fibonacci level? Or will the bears push the price into a full retest of the yearly low? The next 48 hours will be decisive. Keep your eyes locked on the charts, stay informed, and never forget that in this market, caution is your greatest asset. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.